This episode of Spotlight Hawaii is brought to you by Long's Drugs.
It's the show where Hawaii's newsmakers come to talk and to take your questions live. From the nation's capital to Honolulu Hale, from the state legislature to the fifth floor. We bring the experts to you and ask them what you want to know. Spotlight Hawaii with Yanji Denise and Ryan Kalei-Suji on the digital platforms of the Honolulu Star-Advertiser.
Happy Aloha Friday. Thanks so much for joining us here on Spotlight Hawaii. I'm Yanji Denise, joined by Ryan Kalei-Suji. And Ryan, today we are spotlighting the economy.
That's right. A lot of questions about what the future holds, not only for Hawaii, but for the country as a whole. As many experts say, we are heading into a recession. Joining us once again this morning is someone we always like catching up with, Carl Bonham, Executive Director of the University of Hawaii Economic Research Organization, or UHERO. Good morning, Professor. Thanks so much for joining us.
Good morning. Aloha.
Let's start off by just getting a broad picture of the recent report that UHERO released, outlining what the economic forecast looks like for Hawaii as we enter 2023.
Yeah, so you mentioned a recession, and we've been forecasting a recession for the U.S. economy since our last report. We continue to think that's the most likely outcome. We think it will be a mild recession, and that translates into a small drop in U.S. visitors over the next several years. We do think that Japanese visitors the visitor industry will continue to strengthen with international visitors, and that will help to offset that decline. And that, combined with a really robust construction spending in the islands, will help to cushion that blow from the U.S. recession, and Hawaii will escape a recession. We'll just see sort of a pause in job growth, and then that will resume in very late 2023 or early 2024, and we'll sort of get back to normal, relatively slow economic growth.
Tell us a little bit about that. What characterizes a mild recession? What does that, in everyday terms, what does that actually look like, and the impact of this? How do we escape that? How are we able to sort of sidestep that, given that likely is coming to the continent?
So, it's not the case that whatever happens on the continent happens in Hawaii. If you go back and look at past recessions, so Hawaii is a small, open economy that is influenced by global forces and not just the U.S. And right now we're out of sync with the U.S. economy. The U.S. economy has been really booming for the last 2 years, mostly for the last year, and Hawaii is still catching up. So if you look at job growth on the continent, we're talking about completely recovering to pre-pandemic levels of employment. In Hawaii, that's not the case, right? Businesses are still sort of struggling to add workers back in. So that process will continue, right? Businesses won't be laying workers off right now. They're still trying to hire them. And being out of sync is also connected with being out of sync in tourism. And while the US market has obviously more than recovered, right? We're at roughly 15% of pre-pandemic levels with U.S. visitors. International market, that's not true, particularly Japan. Japan is at about 17, 18% of where they were pre-pandemic. And we think that pent-up demand that's confronting higher costs will materialize, and we'll see continued growth there. So because we're out of sync, because there's room for continued growth in international travel, and also because of some of the federal spending in the islands, all of those come together that allow us to avoid this recession, assuming that this mild recession forecast for the U.S. comes true. And for what that means is that we basically think there'll be no growth in the U.S. economy next year. We think that there'll be a downturn for part of the year, but for the whole year, we're talking about zero growth in GDP, and that's a pretty mild recession. It's less deep. It doesn't involve a full year decline in income or GDP, and that's really the mildest recession that we've seen in the U.S. for going all the way back to the first part of the century.
A lot of what our economic forecast looks like is often, of course, based on our number one industry, tourism, and you touched a little bit more upon that. What are we projecting with tourism? I know you had mentioned a potential return of the Japanese visitors. But is there any prediction in terms of other markets that have been critical to Hawaii's success in this industry that is helping to level things off, so to speak, within the industry as a whole? And what can we expect the tourism industry to look like in 23?
So we have already seen pretty significant improvement in the non-Japanese international market, the Canadian, the New Zealand, Australia, South Korea. So we're talking about recovery to 85% of pre-pandemic levels for those markets. Mostly the Canadian market. The other markets are still in the recovery process. And they're dealing with weak currencies as well, right? The Federal Reserve pushing interest rates up as hard as they have has really caused the strength of the dollar to impact international travel from all of these destinations, Japan being the most severely impacted. And so we expect, for example, we expect Canadian visitors to probably return to pre-pandemic levels this winter. And our Japanese forecast is now for a return to about 50% of pre-pandemic levels by the third quarter of 2023. So what's happening in our forecast is we're losing about 500 or 600,000 U.S. visitors in 2023, and we're gaining 600 or 700,000 international visitors. And again, that is predicated on a mild U.S. recession, and that these other economies don't go into a deep or even a modest recession as well. And so there's a tremendous amount of uncertainty here. And as I said when we were chatting earlier, we're going to be wrong. But I think the basic story is hopefully where things end up, so we don't end up with a deep downturn in tourism.
What was interesting this morning, I was reading the data that you had sent out, and also Dan Nicasso had a nice write-up in the Honolulu Star-Advertiser. We encourage our viewers to take a look at that as well. And one of the things that was pointed out in your numbers is that despite the feeling that prices here are rising at a very fast pace, we are not in line with the inflation that is happening elsewhere in the country. Can you talk a little bit about that? Because I think for the average consumer, I know myself, grocery shopping for my family, I feel like prices have really gone up, but it sounds like it could be worse.
Yeah, so misery loves company, right? So it is worse nationally, and every different locale, every different metro area, they're all sort of experiencing different levels of inflation, and a lot of that is tied to how much rents have gone up. And Hawaii rents have gone up much less than the national average for metropolitan rents, and almost 50% lower. So U.S. rents went up about 17% year over year at their peak, and in Hawaii our rents went up about 10% at their peak. And that's not something that everybody notices every day. If you're not going out and signing a new lease, you don't notice. You wouldn't even know that if your rent has stayed stable. But you do notice food prices and gasoline prices, and our food prices have gone up very much in lockstep with the national numbers. Our gasoline prices haven't gone up nearly as much as they did nationally, but they also haven't come down nearly as much. And so we're sort of still feeling that pain at the pump. And same thing with our electric bill, right? That's another thing that you see regularly. It went up with the rising oil prices, which incidentally, oil prices have completely reverted to where they were before Russia invaded Ukraine. And so there's more disinflation on the horizon, meaning the inflation rates come down. And the most recent read on inflation from November was 5.8% for Hawaii. Right, we peaked at a little over 7%. I think it was 7.5%. The nation peaked at over 9%. So that gives you an idea of how much difference there is. But regardless, 7.5% is a lot of inflation, and people are feeling that. But what they may not realize is that we're already seeing prices, literally falling prices. So rent prices have fallen the last 2 months in the Honolulu CPI. Used car prices have fallen about 6 months. And so some of those transitory things like energy, used cars that were caused by supply chain shortages, those are going away, and they're going away pretty quickly. So a year from now, I think we're going to be looking back and going, oh yeah, things have really changed pretty rapidly.
Another indication on the national level that, of course, will impact people here is the interest rates. The Federal Reserve and the department's making those changes, raising those interest rates, and it's affecting sale prices here in Hawaii with the real estate market. What is that forecast looking like with the overall interest rate increase, but also with the housing market and what we can expect and how that will impact the economy next year?
Yeah, good question. I mean, interest rates have been this really inflation and interest rates have been the focus for the last 10 months. And the reason the interest rates are going up is because of the high inflation. So sort of where you think the economy is going to go over the next 6 months depends on what you think is going to happen to inflation. The Fed raised interest rates another 50 basis points just this week, and they also raised their projections for where they think rates are going to end. So they think that their target interest rate, the Fed funds rate, is likely to peak at about 5.1 percentage points, so 5.1%. So that's another 60 basis points or 0.6 of a percentage point higher than where we are right now. So in other words, those rates are going to continue to go up, which means credit card interest rates, savings rates, so rates on savings account, auto loans, all those rates are going to continue to go up, and that will impact consumption, right? It'll encourage people to postpone buying a car. It'll encourage them to cut back on their consumption particularly if they're doing it with revolving credit. And where we've already seen the impact, as you mentioned, is housing. And nationally and in Hawaii, we're looking at sales of existing properties down 40% year over year. And I mean, the sales of single family homes on Oahu in November was at levels we haven't seen since 2009. And if you remember what 2009 was like, that was really in the middle of the great financial crisis. And so sales numbers have just plummeted. Home prices have begun to fall. They haven't fallen as sharply. Our forecast is for a decline in home prices of slightly more than 10%. I don't recall the exact number off the top of my head, but between now and the beginning of 2014, something like a 12% decline in a single family home price on Oahu. Nationally, people are predicting similar things. And really, so that the interest rate impacts so far have been in housing and in those foreign currencies. And we're just now beginning to see it start to bite on consumption. That's what will determine how much of a recession the US has and then how much of an impact we'll see on particularly on tourism.
Those housing prices, that's very interesting to me, just because Hawaii tends to be pretty immune, if you will, not fully, but from that kind of, up and down, just because there's never enough inventory here. But to hear that we could have prices drop more than 10%, how long will it take to get there? And how long do you expect that to last?
So the forecast has that happening really over 2023. And in some markets, we've already seen price declines like that. So remember, in 2021, the market was very much distorted by these record low interest rates, by very significant increase in household formation. So, basically everybody needed more space so that we could all Zoom from home. We had, with those record low interest rates, anybody who was on the cusp of entering the housing market, they basically entered the housing market because you couldn't avoid it with an interest rate of 2.5% on a 30-year mortgage. That was just so dramatic, and so that demand, it has really now completely vanished. Right? You've taken a median household could have qualified for a loan that would have bought a $700,000 or $750,000 condo or house. Now they can only qualify for about $450,000, and so that swing is what's shutting down sales, and we think will lead to a significant pause in growth of residential building, which has long-term implications for housing, which is really a negative. But as we said in the report, we think that in terms of construction activity overall, that slowdown in residential building is going to be offset by really a boom in mostly federal spending on construction and on infrastructure.
I know a lot of the conversation this morning has been looking ahead towards next year, but when we look back at 2022 and the overall state of the economy this year. You'd spoken about some of the pre-pandemic levels of tourism and Hawaii being able to recover so quickly this year and being able to reach almost to where we were there. What are we looking in terms of tax revenue going into next year's state budget? Because of the success and the pretty moderate year that we had in 22, how much will that impact the formation of the state budget moving into 23 and providing resources and some of the recommendations of what lawmakers should be doing maybe with a potential surplus as we look down the line moving forward into 23 and beyond?
So those are great questions, Ryan. I'd prefer not to get too much into the tax picture. I mean, the tax revenue picture, just because I sit on the Council on Revenues and we're meeting, I think, the first week of January to update our forecast, and so we'll know then what the forecast looks like. We've seen much higher tax revenue growth than anyone expected throughout the pandemic, and so much of that is related to the federal spending in the islands, and that sort of kept the economy going despite all the job losses. I guess I would just say I think we're going to have more tax revenues than most of us believe. But again, that depends on the overall economy continuing to perform and not shrinking, right? If we're wrong about the U.S. economy and the global economy, and then therefore we're wrong about the U.S. economy, then tax revenues will take a hit as well.
I want to bring in a viewer question here and kind of expand it out. But Maureen is asking, how many residents have left Hawaii due to the tight rental market and higher cost of living? We did see significant outmigration. We've talked about it with you on this program in the past, just because we had so many people in the service sector who were not sure if and when those jobs were coming back, and went to other places where perhaps it was more open or they could more easily get a job. Now it feels like the opposite is true. You talk to restaurateurs or people in retail, and they can't find the workers. And as a consequence, anecdotally, at least, there are restaurants who say, oh, we only do lunch now, or we only do 3 days a week instead of 7 days a week, or whatever they had pre-pandemic. So how is that out-migration looking now, and what is the workforce like?
Yeah, so that's a great question. So the latest data that we have suggests that Hawaii's population is about 25,000 below where it was in the fourth quarter of 2019. So it's not a huge drop, but it's consistent with people leaving because they lost their job in the service sector, in a hotel, and with really little prospect for that job coming back in 2020. And so without, if you were working in those industries, restaurants, retail, food service, hotels in 2020, and you didn't have family in Hawaii, you were really in a bind, and it made sense to leave. And then we also saw retirements with people leaving the island. So the short answer is around 25,000 outflow of population. Interestingly, through our most recent data, the total labor force in Hawaii is down only 8,000. And so, so that outflow of population, those aren't all people who are in the workforce, right? So if someone's retired, was already retired and chose to move, then it wouldn't affect the labor force. So the labor force is only about 1% below where it was in February of 2020. So really in 2022, we saw significant labor force growth, mostly in the summer. We were adding 8,000 jobs per quarter. And I don't think people realize this. Partly that's because I'm talking about numbers that UHERO generates as estimates of what really happened in 2022, rather than the preliminary data that we're getting from the Bureau of Labor Statistics. So we think this is what the numbers are going to look like after they revise them, and they reflect about 6% growth in payroll jobs in Hawaii during 2022. So the other, that question was also focused on cost of living, and it's true that Hawaii's housing costs surge and food prices and gasoline prices surge, but as we were talking about earlier, they actually went up more in percentage terms everywhere else. And partly that's because our prices started so high to start with. But relative to the rest of the country, we didn't become relatively more expensive over the last 2 years. And so that's one of the things that people would be looking at when they're deciding about moving. I think the bigger drive has to do with availability of jobs, because you can look long term at relative costs of living, and Hawaii has always been expensive, right? This is not something new, and we're always near the top of the most expensive places to live. And so what has changed so much over the last decade is that the U.S. economy has been adding so many jobs in so many different areas across the whole country that really you could throw a dart on the map and say, okay, I know I can find a job there, a good paying job, and I know it will be cheaper than Hawaii.
I want to go back to where we started this and spend a little more time on tourism as a whole, because of the fact that the Japanese had, we've been talking about their return for some time now, and there was a lot of anticipation about, when things were lifted, when travel restrictions were lifted, that we would see this influx and that there would be this surge of visitors that would be coming from Japan. How much are you folks watching just what's happening with the yen, with what's happening in Japan, and how much would you say as a whole Japan plays into factoring into Hawaii's overall economic future and success?
So, look, what we know is that we can reach, near. So one thing that we should focus on to start with is that real visitor spending. So you take total visitor spending and adjust for inflation. It's above where it was before the pandemic. So, focusing on the number of visitors is important because it does play a specific role in employment in that sector. The spending is what really matters for the overall economy, and by that measure, we've recovered. So the tourism industry has recovered. Now, not to where it would have been if the pandemic never happened, but we've recovered back to the level of pre-pandemic spending, even with total visitor arrivals at 2 or 3% below where they were. And so to think about where our forecast for Japanese visitors for 2023 has us at about 700,000 Japanese visitors for the whole year. And it's less than half. We had 1.5 million Japanese visitors. So where this is really important is that because of these two markets being out of sync, there's a possibility, because of pent-up demand and hopefully some falling costs because of strengthening of the yen as we get into the second half of 2023, there's a possibility for the return of Japanese visitors to offset the decline in U.S. visitors. And actually, that would have to happen because we're approaching capacity again. Occupancy rates aren't at record levels or anything like that, but we're getting close to a place where it's more difficult to find a room to stay in, for example. And so really you can't have US visitors at 15 to 20% of where they were before the pandemic and get Japanese visitors back to their pre-pandemic levels. It won't work.
But all of those visitors need restaurants to go to and places to stay. And so, in other words, we need workers. If we're only off 1% in the labor market because of that outmigration, that 8,000 that you're talking about, where's everybody else? Have people just switched jobs, or it's hard for me to understand, given how expensive it is to live here. If people who were working before the pandemic, are they working somewhere else?
Yeah. So that's exactly what we've been focusing on in our reports for really almost the whole year, right? Is how can we understand what's happening in the labor market? And it's basically 10 different reasons, right there. And so all of them come into play. If you look at payroll jobs, one of the things that people may not realize is when we talk about jobs, we're usually talking about what we call the payroll survey, which is surveying businesses. And it's asking them, how many filled jobs do you have? So if I have 2 jobs, I get counted twice. And so there's another survey that we talk about. It's called the household survey, where literally people get a phone call and they're asked, are you working? And that's where we get the data on unemployment. right? So if you're not working, if you don't have a job, but you're looking, you're considered unemployed and you're counted as being in the labor force. And if you report that you do have a job, then you're in the employment numbers. So those employment numbers are down 2.5% from pre-pandemic. Labor force is down 1%. The job count is down almost 6%. So something's going on there. And I think my favorite explanations, without complete proof, because we simply don't have the data, is that people who were holding two jobs, many of them haven't gotten their second job back. And it isn't necessarily because those jobs aren't available. It may be because either they don't want their second job back and they're living off their savings from all the accumulated savings that happened during the pandemic, or maybe they're doing gig work on the side, right? So instead of working a second job in a restaurant or retail, they're driving for Uber or they're delivering food, which we saw a big increase, during the pandemic. And then another thing is long COVID is very real, and the numbers continue to rise. We'll be releasing one of UHERO's health report I think in early January that documents some of that long COVID information from surveys that we're doing. And we know that people who are experiencing moderate to severe long COVID are significantly reducing their work effort. So the numbers are actually quite large. So if you combine second job holding and long COVID, you can easily explain why we're short about 30,000 jobs, even though the labor force has recovered as much as it has.
Wow, very interesting points there, as we actually just had a conversation about long COVID as well a few days ago. So it'll be interesting to see your report as well. Our time, we only have a few minutes left. It goes by so quickly. But before we let you go, just some final thoughts as we move forward to 2023 and what people here in Hawaii can expect.
Well, so an important final thought is that this is just a forecast, so take it with quite a bit of Hawaiian salt. There's a lot of uncertainty, right? There's the best case scenario has inflation coming down really rapidly and the Fed not raising rates as high as they think they're going to. In that case, the U.S. economy could avoid a recession outright. And then, there are worst case scenarios where inflation is much more intransigent. It's hard to bring it down. Rates go up higher and we get a deeper U.S. recession. So you really kind of have to plan for your scenarios and be aware that things could get worse, but hope for the best.
Oh, hope for the best.
Happy holidays.
Well, thank you so much for joining us this morning. We really appreciate all the research that you and your team does. We will be looking forward to that report in January on long COVID and the impact on the economy. And thank you so much for being here. Happy holidays, Professor.
Thank you. My pleasure.
Take care.
Hello.
Ryan, it's so interesting that his response at the end there, really intersecting with our conversation with Dr. Yes on Wednesday, when he said that about 20% of people in his experience who contract COVID experience long COVID symptoms that can last a year or more. That ties right to what Professor Bonham was saying about this labor shortage that we're experiencing, people perhaps hanging back because they're experiencing illness, and then some others not taking that second job. I haven't heard it explained in that way. So that was very interesting to hear. Overall, some good news. He's saying that while the continent will likely experience recession in the next year, it sounds like Hawaii may be able to sidestep that.
Yeah, and again, really predicated on what happens with interest rates and inflation overall, but saying that the timing of where Hawaii falls in relation to the U.S. And the overall economy is a little lagging. And so therefore, while we may continue to see visitors from the U.S. and the mainland arrive here in the islands in early part of 2023, what may help Hawaii really level out will be the return of the Japanese visitors and the Asian markets that will hopefully help to sustain tourism overall as they return maybe in the later part of 2023 and help offset some of the differences there with maybe more a decline in the U.S. visitors because of a slowdown in the U.S. economy overall. It'd be interesting to see how things really shake out. We also talked about the housing market here in Hawaii and some of the numbers that we're seeing there.
Yeah, very interesting that he's saying that they're expecting prices to drop by as much as 10% or perhaps even a little bit more. That, of course, impacted by the cost of getting a mortgage these days, over 7%, compared to around 2.5% when things were really, really low and a lot of people could enter the housing market. He did say that, folks who were on the fence really, there was no reason to stay on the fence. And so they entered the housing market. But now with the change in interest rates, you're just not seeing that. And you're seeing a real decline in home sales and decline in prices as well. We can talk to Professor Bonham for forever because he has so much insight in all the different sectors of our economy. We appreciate him and being on. We encourage you also to take a look at Dan Nicasso's write-up of that report in today's Honolulu Star-Advertiser. It does give a glimpse into some of the numbers and a deeper dive into some of the things that we weren't able to get to today. But overall, we are hoping for good things. And also interesting, Ryan, that as much as we grumble about prices, he's saying that Hawaii is actually doing better than a lot of other places.
Yeah, I think it's easy for us here in Hawaii to see those numbers and sometimes get sticker shock. But when he relates it to the different variables, including mortgages that people are paying and how that is a fixed cost, that when we look at the overall cost of things and goods and services, that there is a difference in prices, but what Hawaii residents are paying may not be substantially more than what people on the mainland are actually facing with those types of costs as well. So always interesting to hear the comparisons because oftentimes we look at the situation of what we see here in Hawaii, but it's great to get context about what's happening on a national level as well.
Yes, and on Monday, we are going to be talking about the economy and a host of other issues with our guest. Governor Josh Green will be joining us. The last time we spoke with him, he was a candidate. Now, of course, he's been sworn in. He's appointed a number of people to his cabinet. Those folks obviously need approval, but we will be asking him about his cabinet picks, about his agenda going into the legislative session, get his thoughts on what's happening at Red Hill. Of course, there's a lot on the governor's plate looking at Mauna Kea and a bunch of other issues that will be coming up in 2023. So we want to get his forecast as well. And we do hope you join us right back here on Monday at 10:30.
Have a great weekend. Aloha.
This episode of Spotlight Hawaii is brought to you by Longstrugs.